Hi everyone, my name is Mark Quinn. I'm a chartered financial planner and tax advisor based in Portugal, and I help clients that are relocating to or living in Portugal with their tax and financial planning affairs. And in this video I just wanted to cover a very quick example of a very expensive mistake that I've seen a few people make. Probably one of the most expensive mistakes there is to make when considering the move to Portugal, and that you should be aware of. So this is in the area of property planning, and in particular when somebody is selling their main home in the UK. Now, from a UK context, we're used to the principle that when you're selling your main residence, it's never subject to tax. As long as you've occupied it for the full time of ownership, then that full ownership period is going to be completely exempt from capital gains tax. Now that's a UK concept, and when you're a resident of Portugal, or most other countries for that matter, they're not going to recognise the concept of private residence relief, and therefore you're going to get taxed on the full gain here. So this particular gentleman I spoke to a few months back now, he was actually misadvised not to apply for the non-habitual residence scheme, which would have avoided this capital gains tax issue in the first place. So he moves to Portugal, he sells his main residence, or what was his former main residence in the UK, expecting no tax. Now, he was completely right from a UK context, because from a UK context, it was his main home. Now, as I say, there's a bit more of a nuance to it than it's just all completely tax-free, but as a general rule, most or all of the gain will be tax-free in the UK. And just to be aware, it's also considered your main residence in the UK even 9 months after you leave. So if you left the UK today, July 2025, it's still going to be your main residence up until August, September, October, November, December, January, February, March, April next year, so April 2026. But from a Portuguese context, a sale of a property triggers a capital gains tax charge. Now that applies whether it's your main home or not. Now there are a couple of ways of avoiding capital gains tax on the sale of your home here, but that's a topic for another video. So back to this gentleman I met. He sold his property here as a Portuguese tax resident. He didn't qualify for the non-habitual residence programme. There was no tax due in the UK, but it resulted in a tax bill here in Portugal of around 1.5 million euros. So it was quite a painful experience for him. Now it's something that I see a lot, particularly now with the cancellation of the old NHR programme. It's something I'm just trying to stress to people that are considering making the move to Portugal, that if you are planning to sell your main home in the UK, if there is a capital gains in there and it's of a substantial size, then seriously consider selling the property prior to departing the UK. If you ultimately want to return to that property in the UK or rent it out and you're not going to sell it, then it's not so much of an issue. But as I say, if you are thinking about selling it, just be careful of the timing, something that needs to be done before you leave the UK rather than when you've entered the Portuguese tax system. So I hope you find that video useful. Speak soon.